For the time being, let's shift the focus to the BFSI space. Yesterday, the representatives from the BFSI body, FIDC, they met Finance Minister as part of the pre-budget consultations, and they had a bunch of demands. One of the main demands was to seek a refinance window, something similar to what the National Housing Board has, and so on and so forth, and some higher thresholds as well when they're looking at the SARFAESI Act. Shweta Daptardar is with us, who tracks this space quite closely. Shweta, I don't know if you caught some of these demands. We also had the FIDC CEO with us explaining why they want to push for these changes, with the centre. Your first thoughts on this and how you're looking at the NBFC space overall?
Good morning, Surabhi. So yes, these FIDC demands, in fact, especially pertaining to having a refinancing window for NBFCs, has been a long-drawn demand. Like I'm hearing this for over 3 years now, and rightly so, because larger part of NBFC business model success is largely contingent upon liability structures. And if you look at the recent periods where a year ago RBI or the regulator had turned pretty stringent, so there were constraints on growth. Thankfully, things are turning around for better. Going forward, we believe, especially post Q2 FY26 earnings, NBFCs are standing at a vantage point. Things are only looking up going forward, especially the second half of the fiscal.
Okay, all right. Hi, Shweta. Good to see you win. Looks like you're set for the winters, huh? All right. So that's about that. But the big question is going to be on Sammaan Capital. What's your view? Valuations, there is support. The question is whether or not that deal is going through. What's your view?
Yeah, look, Nigel, market doesn't like uncertainties, and for good or bad reasons, whatever, Sammaan Capital has been in news for a fairly long period. More so, I would definitely refrain from giving a sort of a value view on the stock per se. But if you look at the whole HFC space, especially for NBFCs, it has been a slightly tough going because banks have been proactive in terms of interest rates. Also, if another 25 bips rate cut is in offering in the forthcoming RBI policy, then there is no way that NBFCs or HFCs can deal with this kind of competitive rates. So I would slightly not very bullish on HFCs. Even for AHFCs, affordable housing finance players, the going was slightly tough in the quarter gone by, where we saw some stress in the micro lab segment.
So a little cautious on housing finance and even the micro housing or the affordable housing finance companies. Got that. So what do you like, Shweta? Tell us that. I mean, gold financiers, they've done so well this year. Then there are the wider, bigger retail plays. Bajaj Finance, what a move on the stock this year, right? So for 2026, what's the best or couple of the best NBFC stocks to own?
Yeah, so Q2 FY26 earnings through three important trends. One is we clearly saw asset quality challenges bottoming out for NBFCs. So barring CV, micro lab, two-wheeler loans, and a little bit of AHFC stress, most of the segments have started easing. Personal loans and credit cards have started easing. There is some amount of stress in unsecured business loans, but second half, as the activity picks up and GST simplifications continues to fuel demand, and post festive season demand is looked to sustain, then second half is definitely better. Against this backdrop, we definitely see diversified NBFCs, say likes of Bajaj Finance, L&T Finance, even Shriram Finance, wherein 60% of the AM mix today is largely coming from non-youth CV portfolio. So these names definitely stand to benefit. Gold financiers have definitely seen a very strong bull run, but considering the fact that gold prices will continue to stay higher, I mean, that's what we are hearing from the industry experts, gold financiers will remain in limelight. Having said that, we continue to maintain positive stance on Muthoot Finance even a year ahead, because of course, the growth today is driven by gold prices, but Muthoot Finance definitely have those right fundamental ingredients in place to post 20% loan CAGR even for next 2 years. So yes, gold financiers will remain in limelight.
Okay, all right. And final question before I let you go. SBI cards, you believe it's time to swipe it? It's been a big underperformer. I look at the ROAs, I recall they used to do ballpark around 5%. That number dipped to around 3%. Various issues on credit quality on their mix as well. You believe things are now getting sorted out and should look up from here on?
Yes, Nigel, so absolutely right. After a huge, strong string of 5% ROA for 5 long years, those dip in FY25 to 3% odd. Now, where they are standing is where credit cost challenges are bottoming out. The 2020 and 2023 bad customer portfolio write-offs is largely behind. So 2 quarters down the line, wherein we see credit cost materially declining, that's exactly the point where cards in force accretion will start picking up. And that's actually the starting point of revenue driver for SBI cards. So just like most of the NBFCs, SBI card today is standing at a vantage point where we start seeing things looking up as asset quality challenges are bottoming out. So we definitely see 4.5% ROA on horizon by FY28. And we definitely see spends traction supportive. So if you see post Diwali spends traction this year vis-a-vis last year has been holding up pretty well. So asset quality challenges bottoming out, spends traction picking up, definitely bode well for SBI cards ROA trajectory to start picking up from here.
Okay, all right, Shweta. Good to have that chat and stay safe. It's getting cold. We can make it out. Thanks a lot for joining in and giving us your call. We look forward to hearing your thoughts in the time to come.